Welcome everyone to the trading journal entry for today, February 8th. I'm going to go over some basic charts. We're going to look at the Nasdaq, the S&P, the Dow Jones, and some breadth and maybe some intermarket analysis, see what gold, oil, copper, US Treasuries are doing, and go from there. So we are limited to 15 minutes in this video. Let's dive right in. Okay, I'm going to make this guy smaller. All right, move this down to the corner. Okay, so we'll just dive into my chart list and we'll see what is happening. I think eventually what I'm going to do for you guys is to go over some individual securities as well, not so much focusing on the S&P, the Nasdaq, or the Dow, these larger indices. I think they could be a little bit sort of stale, a little bit boring, but we will dive into individual companies and take a look at them, maybe around earnings. Okay, so let's visit this chart right here. This one looks at the election cycle. So one of the most powerful cycles according to Stock Traders Almanac, this wonderful book right here. The presidential election cycle that occurs every 4 years is one of the strongest reoccurring patterns. So I've got this marked out. So let's see, so 2022 was obviously last year, 23 is the pre-election year, and then 2024 is the election year. All right, so in October we had a bottom, and we've been rallying since then. The average gain from the bottom before the pre-election year is typically about 6, 7, 8%, which I've got marked here. So the level on the Dow Jones should be around the 3,500 level on average. It can obviously go past that, or it could even go lower. So yeah, that's our look here. We got a slower MACD. This is a long-term bullish sign. It hasn't contracted, so based on this slower indicator, it would suggest staying in the market. And another thing that's important to look at is on balance volume. It hasn't made a full recovery and trending upwards, but things are looking a little bit better. Okay, let's move on to our trend lines. This one I've got marked up like crazy, as you can probably see. Okay, so the biggest noticeable trend line for me would be this one here. Is basically from the December highs till now, we are consolidating sideways. We haven't had a material move upwards by any means in the Dow. And another one that I recently drew is this one here. You can see that there is some support. So we're kind of coming into a little bit of a triangle in this area here. And so with this type of pattern, it'll typically tell us that stocks are either going to move up or down. So when you have a sideways consolidation, typically what I've learned is that the market is trying to make up its mind either to the upside or to the downside. We will see. Okay. Okay, this is a monthly chart of the Dow, and here we are at this point. We can see that we haven't had much of a move since November. And the MACD monthly hasn't turned positive. So I wouldn't go out on a limb and say that we are full bore bullish right now. I think we're in a point of confusion. Going online on Twitter, you're starting to see some confusion as to why is there so much greed? Why are stocks moving up? They shouldn't be moving up. The economic picture isn't very strong. But again, price is absolute truth. And that's what we want to focus on, is price. Okay, let's move on to the Nasdaq. Here is the Nasdaq 100 daily chart. And on here, I've got the exponential moving averages. So unlike the simple moving average, the exponential puts a little bit more weight on recent data, on recent price data, and so these moving averages move a little bit faster. So the Nasdaq has been the biggest winner so far since November, especially even this year, and that is as expected because seasonally, technology sector, the tech stocks, are usually much stronger in the November to April period. That's known as the best six. November to April typically has the best gains, most consistent gains in the stock market. So you can see here, unlike the Dow, the Nasdaq is rapidly ascending. We've had a few days of a pullback, which also as expected because out of that best 6 months from November to April, February is typically the weakest month. We are on a bit of a weak start, arguably. So obviously we've got to see how the rest of the month turns out. But if you're bullish and you're looking to accumulate, February is a good time to start to consider. So the Nasdaq has broken out of this long-term downtrend quite convincingly, and what we want to see is it hold up here. My guess is that we're probably going to start to hold above the 200. We might test below, but we've broken resistance, in my opinion. Here is another messy looking chart. Let me see if I can clear this up for you guys. Okay, we'll save that and dive right in. Okay. So I was actually expecting a little bit of a deeper pullback in the Qs, but we didn't really get that. We actually got a continued move upwards. What we do see today is a rather important break in the MACD line. The histogram has turned negative. The slower MACD is still positive, so based on my experience, there could be some more room to run, but we are seeing real consolidation starting to occur here since February 2nd. Okay, so that's a very short term. I am looking to add more into the Nasdaq, but I want to get it at a slightly better price. I'm having a hard time jumping into the market because it does feel really early, but we'll see. Here's a monthly look. I like to show this one and always circle back to it because it gives us a much more longer term view. So for the longest time, we were supposed to have caution. The price was below the 40-month moving average. This month currently we are above it. So I wouldn't say we're out of the woods, totally out of the woods just yet, but there is some significant improvement, and I think this is probably the catalyst for all the bullish sentiment out there. I also saw that the CNN Fear and Greed Index is pretty high right now. I think it's upwards in the extreme greed point. So we'll see. I have a feeling that it's once that breaks down is when we want to enter in more aggressively. Okay. So, and finally we'll look at the S&P. Here's that best 6 months I keep talking about. So from November to April is the best 6 months. Although, especially with the tech sector, it can actually carry forward out into July. So that's why I've got this box out here. So if there's strength, it should continue until July for that period. The S&P 500, again, is starting to, looks like, stall out here from its November peak. I think there needs to be some strong conviction here. Did I draw this out correctly? Oh no. Sorry folks. That was back from the end of January. Now let's see where we're at. Okay, so here we are. So kind of like we guessed it, eh? We've got the red square here. This is to denote that February is going to be a weak month and should start to accumulate stocks. So if we can get down to probably the $4,000 or 3,900 level in the S&P, I think it will be a point to get in. From a weekly perspective, this is the S&P. It is above all moving averages. That is a typical bullish stance to have. So you'll probably see there's tons of writing all over here. What I'm trying to do is denote and keep a record of how I'm feeling, what I'm thinking about the market, and trying to hold myself accountable. I think it's super easy to like get lost in the sauce if you're talking to your neighbor and he's all of a sudden bullish, or random people are talking about the stock market. It kind of might make you feel like you need to do more. This is trying to record my past thoughts and act accordingly like that. Okay, let's actually move this guy to the side, on this side, because a lot of the action is over on this side. So, okay, so from the MACD histogram, which is our main tool that we look at here, what we're seeing is the MACD made a high back in end of November where price was here, and now price is broken above, but the MACD hasn't made a convincing breakout from this peak here. So this is worth watching. There's still a lot of time to go, but it's worth watching. Okay, and we'll look at the monthly real quick. From the monthly, we are above the 10-month moving average. This is a quintessential bull sign, but again, we want to see more movement. It's better to make less than to lose more. Just remember that. Let's do some intermarket analysis before our time is up. Okay, let's take a look at commodities versus stocks. How's that looking? So commodities has actually, that trade has died since June. And that might be on the expectations of a deflationary environment. Commodities should do well in a deflationary environment. And we see a convincing pullback right to the 18-month moving average. So gold, copper, all that stuff you probably want to avoid. Housing index. The housing index also broken out, and a lot of people regard that as a early indicator of economic prospects. So we'll continue to watch that one. And I promised we'd look at some bonds. Here's a 10-year yield. 10-year yield got right down to its 40-week average and is starting to bounce. The RSI is starting to move up. So there is some momentum in bond yields. Is that the catalyst for stocks to move lower? Many argue that that is the canary in the coal mine, is we've gotten complacent on yields because they've been declining since October, 4 or 5 months. It's important to revisit that. Okay, what else can we look at? This is let's skip that one. I had a really good. The US dollar is bouncing up, and that makes sense because the 10-year yield is bouncing up. So we will see, this is a 2-year treasury on our chart, is popping back up, and so is the dollar. So if you have a US dollar portfolio and you're living in Canada or any other country, this is boding well for your portfolio. Okay, so I will end it there with the intermarket analysis. I think it's the first time I'm showing you guys all this. All right, I guess we will see y'all on the next one. I hope you found this a little bit enlightening and you can copy some of the indicators and tools that I've used. See you on the next one.